trading day. Joining me right now, Dryden Pence, Chief Investment Officer, Pence Capital Management. We want to talk about 2026, some of your big picture thoughts. I will talk about today's current news, and that is the CPI print that came in here, 2.6% and lowest since March of 2021 for the core, lower than anticipated. Just a quick thought on the Fed. And this, I know they have to wait for more data, Dryden, but some of your thoughts on what the Fed may be thinking.
Well, this actually gives them room to make another move in January or thereafter. And so we've come down 75 basis points. But if you think about last year and the year before last, we did these moves of a full percentage. We did from 5 to 4.5. Now we're going from 4.5 maybe down to 3.5. And that propelled mid-caps and that propelled companies that borrow money because cost of goods sold goes down. So we see that accretive to earnings next year. And this gives them room to move more quickly, and I think that that's important.
And we'll see whether or not they decide to do so, because you have dissenters in there who think that the cuts should be finished at this point. So what are your thoughts on 2026? What are some of your expectations, maybe even for the first half of the year?
We think it's going to be pretty good. And the reason why is you're seeing earnings. Earnings are basically expected to go up about 13%. Earnings go up 13%. Market ought to go up 13%.
That's something if that happens.
Earnings are an all-time high. Market should be an all-time high. And we think there's a lot of stimulus coming into the market. If you add up the tax from the great big beautiful bill, right? If you add up the over withholding that everybody's going to get back, that's about $150 billion, plus about $600 billion or more in tax reductions. So we have coming in the first half of the year, people are going to begin to feel this $750 to $800 billion worth of stimulus moving in just from the tax bill. And then you have both fiscal stimulus and monetary stimulus coming into the market. So we're pretty constructive going forward.
I know. I love this. I mean, I want to get to some of your picks. I know you have Amazon in there and a few others. But, some folks think that maybe the 13% is too optimistic. 10%, I mean, earnings growth is earnings growth, and it's nice to see fundamentals improving. We had a good showing of earnings this year, right?
Well, we've had good, basically, we're going to look at fundamentals and we're going to look at earnings, right? You've got the MAG7 should go, they're projecting about 18% and about, 12 to 13% for everybody else. So I think that you're just going to continue to see this quality of earnings go up. So even if we don't get necessarily a 13% move equivalent to the what you're going to see is a market that's going to be able to withstand some of the emotional buffets that come through the year, if you will.
Do we need a Fed cut to keep this story going next year, whether it's January or March or April, or not necessarily?
Well, first of all, they can play with the balance sheet, right? So they've stopped, tightening there. But I think that there's probably one more cut. The question is, does it come before or after June? If they don't get it before, June, they'll probably do it in the June meeting. So, because the board's going to change, there's composition's going to change a little bit. So there's one more in there.
Yes.
We just a question of when.
Okay, let's talk about Amazon. That's a name you like. And look, the high was 258. It has pulled back some. It's trading around 221 now. What is it about Amazon, and where do you think it's headed and why?
Amazon's got 2 or 3 things going for it. The first one is it hasn't run like the rest of the MAG7. It's been a little bit of a lagger this year, so it's got some catch-up room. It's tremendously dominant in its space. 4 out of every $10 that are spent online go across the Amazon platform. And Amazon is now as big as Walmart. 2024 fourth quarter was the first time they beat Walmart in total rev. And now it looks like they're going neck and neck, and maybe they beat them this year. So this is Amazon kind of really maturing into the behavior of massive online consumerism and all of the things that they have going both in the AI space and AWS. So we think they're going to begin to fire on all cylinders.
All right, next up, GE Aviation. Tell us about that one.
GE Aviation, we look for choke points, companies that are dominant, right? So when you take a look at probably 80% of the Neo platform and the 737 platform, GE Aviation has about a 4-year backlog of revenue just in orders for jet
Right.
engines, and they've got like 10,000. They got 8 years of construction on the of capacity going forward in orders. So when you have that big of an order backlog, we kind of like the company.
Look, GE Aerospace is looking so good. It went from 159 up to 316. You think there's still more upside potential. And we're going to be talking about GE Vernova in the next segment, and that too has been running up to highs and has had a great year. So you like GE Aerospace. GE is the ticker symbol, so people don't confuse them. Last but not least, in the picks, you have United Rentals. Tell us about that.
Well, we have a huge infrastructure problem in this country. We have got, if you take all of the bridges that just need to be replaced, they'd stretch from, and put them end to end, they're going to stretch from Seattle all the way to Las Vegas.
Right.
It's really about $1.2 trillion worth of construction. Well, these companies need to rent equipment in order to be able to do all of this building. And URI, United Rentals, is dominant in that space. They have about 17% of the market. If you're going to build stuff, you got to have equipment. You got to have equipment, you're going to rent it. And URI has the ability to be the dominant player there.
Do we need to continue this AI spend to keep the economy and the markets afloat and shooting towards your targets? There's been a lot of AI spending, CapEx, and circular funding too. Do you think that continues in 2026, and is that necessary for these projections to come true?
I don't think it's absolutely necessary for the projections to come true, but we're in this moment where we're transitioning. We've been doing infrastructure, right? So now we're going to move to implementation. So we're going to continue to build out, it's like the Transcontinental Railroad, we're continuing to build out all of this infrastructure, but now companies are beginning to implement AI. That increases labor productivity. Labor productivity increases margins. So I think as we make this transition from pure infrastructure over into implementation, that the AI story is going to continue to be accretive to earnings across the board.
Amazing. Great to see you. Dryden, Pence, thank you so much. And your picks too, Amazon, GE, and United Rentals. And thanks for your projections for 2026. Dryden, Pence at Pence Capital Management. Thank you. Coming up, quick break, and we'll get you ready to